Hello, everybody. Welcome to Friday. We're not having another Talk Money with Tom show today, so I'm just going to do a quick summary for what I saw happening this week. Unfortunately, here we are on Friday. The market's down. I'm wearing the red shirt. It's down 1.7%, actually a little bit more than that. And this is a really interesting week. It was a short week, but we had, two record highs set this week at the beginning of the week. And then Walmart came out with some soft forward guidance. Market came down yesterday. And then today we had a consumer sentiment survey that came out. Part of that survey, they asked people's expectations for inflation going forward. Those expectations are higher than they've been since 1995. So a lot of these things are, happening based on what people are expecting. So Walmart's expecting something, and we're ending up with the market coming down because of that. Their forward guidance was less than expected. Well, of course, this environment's very difficult to, kind of guide people as to what your company might be doing if you're not sure what's going to be happening with these different policies. So probably hedging their bets as far as that goes. The consumer sentiment survey, yes, expectations are high for inflation because of the policies that people see and are talking about with tariffs and deportations and those types of things that could be higher inflationary. But at the same time, you can't have higher inflation if you also have recessionary forces happening. At least in my opinion, you could end up in the middle with what's called stagflation, which is slow growth with still higher inflation. But at the moment, we are in the higher growth area with moderate inflation, and so that's where we're actually at. So the everything that's happening to the market right now has a lot to do with kind of what the expectations are for what might happen. And here's my look at this. First of all, take a look at the market because the market talks to us and it tells us. And so right now, the market doesn't have a guide as to a direction. It is just going sideways. It's waiting. Okay, we've been going sideways since the middle of November. We're still in that range. It's great. We broke out a couple days today to the all-time high, or sorry, this week. But we didn't hold it. So we're just in this range and the market is waiting to see what's going to happen because sometimes, the expectations are wrong. Matter of fact, most of the times the expectations are wrong. So we kind of have to wait and see. So for example, we go back to 2018, we put in $350 billion worth of tariffs against China. Market dropped 19.6%, stopped doing new tariffs. The market came back fairly quickly. And, they're still here. Those tariffs are still ongoing for the most part. And yet we hit two new all-time highs this week. So what was the real impact of those tariffs to the stock market? Well, honestly, it was a short-term impact because of expectations and people's concerns for what it could mean. And that's what we have to fight against as investors. Our expectations for what something could mean often aren't correct for what actually happens. And so, hey, if you freeze a bunch of federal contracts and if you lay off a lot of people, that could lead to recession, but it doesn't have to. It depends. At the same time, we have strong parts of the economy going on. So, it's devastating to those families, but it might not impact the stock market dramatically. It might actually offset some of the inflationary forces that are potentially here also. So it is a really, interesting environment in the sense that all of these forces are crashing together at the same time. And the market is going sideways because of that. And that makes sense to me. I think that's a very healthy thing for the market to be doing here. To be going down a whole bunch just based on expectations for what could happen doesn't make sense. Market does it all the time. Usually those are buying opportunities to go skyrocketing up because of the expectations for how these regulation cuts or tax cuts or different things along those lines are going to, help as far as that goes. So, we'll see what goes on throughout this time period. But I think we have to be just like the market is, just kind of sit back, kind of analyze what's happening, look at what's an expectation and what's a real result as far as that goes, and then try to go sideways essentially until things just get to be more clear. We've got a lot of things out there that we're just not sure of how they're going to go. Are deportations even going to work? Are they going to be able to do what they're trying to do? Will they stop because the farmers, start to complain too much as far as that goes? Construction in those areas too are really hit by this. What happens with these tariffs? Are they just negotiating tactics? Or are they actual, what's going to happen with the tax cut? The Senate passed a package that they did on a vote-a-rama, I think at 4 something in the morning. But what happens with that? We got all of these different pieces happening at the same time. it's going to be difficult for the market to really figure out what's going on and to have a run one way or another. The market's doing the right thing. And actually, this today is kind of a big down day, but still, we're still in the same range that we've been in since the middle of November last year. And so I like these sideways motions. I think the market's really showing some strength. One thing I do like about this sideways motion is we are hitting the top of this range more often than we're hitting the bottom. So that's a good thing. So we'll see what happens. If we follow the bottom, then, we're going to have some issues because we have been here for so long. It creates a kind of a resistance zone to get back through at some point in the future. So, but altogether, I think right now we just need to sit and watch, kind of like the market's doing. Don't get too wrapped up in our own expectations for what might happen. We might be right, based on what we're thinking might happen, but we could be wrong too. And so really, it is very complex. It's not that easy to see exactly how this thing's going to play out. You got one party yelling, "Oh, that's inflationary," another party yelling, "Oh, that's recessionary." Again, those two things aren't going to happen at the same time. And so, which direction are we going? And so far, we've been going down the middle for a really long time. Since the middle of 2022, basically, we've been going down the middle between these two counteracting forces, and we've had good rates of return in that landing zone. So, we're possibly still there. Just, with all of these different things happening, the market's got to sit back. And that allows what have been really good company earnings to continue to go. We've had great earnings, and that's what's going to drive this stock market. And so, if earnings continue to grow and the price stays the same, then the price to ratio to earnings gets better and better, and the market starts to get healthier in that regard. So, these aren't bad things to happen for a long-term investor. We've had great years in 2023 and 2024. So, having some sideways motion, for a period of time is a really good thing, in my opinion. So we don't get so stretched out that we end up with kind of an epic downturn like a 2008 or 2000 or those types of things. So looking forward to see what's going to happen next week. I'll start doing my regular, Monday show again, for the market, and we'll go from there. Talk to you then. Thank you very much.